Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Hey everyone, welcome back to Quora. Today we're going to dive into some fascinating insights about the stock market and its incredible track record of predicting future performance. You might be thinking, what's the secret behind this remarkable accuracy? Well, let me tell you, it all comes down to a little-known phenomenon that has happened 31 times since 1950. That's right, folks, the S&P 500 has experienced an extended winning streak lasting at least 5 consecutive months for the same number of times. And what's even more impressive is that when this occurs, the index tends to deliver outsized returns 1 year later. We're talking about a 12.6% average gain. Now, if that weren't enough, we also have an immaculate track record from a separate valuation-based tool, which has been predicting significant downside in the S&P 500 and its peers. But here's the thing. While this data is incredibly compelling, it's not without its caveats. The stock market can be notoriously unpredictable, and there's always the risk of a sharp correction or even crash. And let me tell you, we've seen that firsthand recently with the mini crash triggered by President Trump's tariff policy. But on the flip side, when the S&P 500 manages to close another month above its recent peak, we're looking at a 5-month winning streak right now. It's historically been a strong indicator of future gains. I want to highlight one particularly interesting metric, the Shiller price-to-earnings ratio, or CAPE ratio for short. This cyclically adjusted measure has averaged around 17.3 when back-tested to January 1871, which is still considered relatively normal by historical standards. However, what's striking is that the S&P 500's Shiller P ratio is currently hovering near a multiple of 40. Yes, you heard that right, folks. This is an extremely rare occurrence, and one that's only been reached twice before in the past 154 years. The implications are clear. When we see this kind of valuation, it's often followed by significant downside for Wall Street. We're talking about a potential quarter or more of losses, similar to what we saw during the 2022 bear market or the bursting of the dot-com bubble back in 2000. Now I know some of you might be thinking, Quora, this all sounds too good or bad to be true. And you're right, it's not. But the thing is, history does repeat itself. And if we look at the data from Crestmont Research, which analyzed 106 separate rolling 20-year periods for the S&P dating back to the start of the 20th century, there hasn't been a single instance where the index declined in value over that period. So what's the takeaway? Well, as long-term investors, we need to stay vigilant and keep an eye on this valuation metric. But at the same time, it's essential not to get caught up in the bear versus bull narrative. After all, there are plenty of examples where both camps have been proven wrong. In conclusion, folks, when you look at these numbers and trends, it becomes clear that the stock market is indeed a remarkable place. And as we move forward, we'll need to stay nimble and adapt to changing circumstances. But for now, let's just say that this data is pretty compelling, and we're keeping a close eye on things here at Quora.